Now we have 65 persons on board and it is already 6:30. So let me start today's session with permission of respected Anand Rathi Saab. Uh,
Sure, go ahead.
at the outset, I would like to introduce the distinguished panel today. Uh, all of you know them very well, but it's my duty as the host to introduce everyone. So Anand Rathi ji needs no introduction. He was BSE president long back after Aditya Birla Group. And now he's heading Anand Rathi Securities. And you know what wealth he has created for others and what wealth he has created for himself in the securities market. Uh, the second panelist, Varun Mandana, is part of one of the leading banks in US. And in the bank, he is head of the Treasury Advisory. Whatever views anyone would be expressing here would not be their official views or on behalf of the institution for which they are working. It'll be absolutely their personal views because this is an academic session. And the third panelist with us today is Sujan Hajra, Mr. Sujan Hajra. You might have seen him on televisions. He's chief economist at Anand Rathi Securities, and he has been expressing his views on all kind of economic affairs and developments globally worldwide. Next panelist, we have our own Satya Bansal. Satya has been in finance, banking, capital markets, equity, private equity, and he was heading the Barclays Private Bank in India. He was chief executive of Barclays. Now he has his own the promoted Blue Ashwa Capital, the company which has been promoted by him, is founder and CEO of that company, which is again creating wealth for investors and making investment in many new age ventures. The last one, the fifth panelist today is a young one, Gaurav Rungta, who represents the business and CII. He has been the founding member of Young Presidents Organization in Rajasthan and also a member of CII National Council, is a member of CII National Council. He is also co-chair of the Energy uh, 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 Committee of CII North Region and formal chairman of CII Rajasthan. So at the young age, he has been interacting with regulators and the governments on behalf of businesses. So I thought he'll be a person who will be correct person to represent the industry here and raise the voice on behalf of the industry. With that, friends, I would first briefly introduce the two subjects and why we have taken the two subjects. Many of you are already aware about the two subjects. Rather, this US tariff is making headlines now for many days, uh, and everyone knows what's happening. Even today or yesterday on 15th August, what's happening. Everyone is watching meeting of Putin and Trump. So we'll be discussing that as a second topic today. We'll start our discussion with the digital currencies or virtual currencies or the stable coin. That will be first discussion. And the second discussion will discuss the US trade tariffs and its impact and all kind of impact on the market, impact on the business industry, impact in US, impact in India. So before we understand and before I start asking questions to the panelists, let me just give a brief background of the two topics. And therefore, you, I think, can view the slides which are there. You can view the slide on the screen right now. So I'm starting with the first one. Right now, there are 85 participants, and that is good enough number to introduce the first subject. All of you know that how in the world, the currencies started. Before currencies, all the trades were in gold or silver. There used to be gold coins or silver coins. And then we started with fiat currency, and you are aware of the cryptos, or most of you have heard about cryptocurrencies, different kind of cryptocurrencies. Digital currency is a concept which is a very recent concept, but there is a pilot going on by RBI and also by the central banks in different countries. And the most recent concept is stablecoin, or this virtual currency. We need to understand the distinction between all the four so that we can take the discussion forward. So far as the fiat currency like rupee or euro or dollar is concerned, it is always centralized, issued by the central bank of the country. It has to be stable in nature because there is a guarantee by the government, and like RBI note says that the governor guarantees if nobody else honors the rupee, then you can go to RBI and get the value worth what is the face value of that rupee. Same way it is there in all the countries. So it is always issued by the Reserve Bank of any country. It is the value of this is governed by the exchange rates, of course. If you are outside the country or you are a person who wants to exchange dollars with rupee or some other currency, it goes by the international exchange rates. Crypto, on the other hand, is a decentralized currency which is issued through the mechanism of blockchain. However, it is very, very speculative. All of you know that crypto is volatile very frequently. There are many ups and downs. And why it is so? Because it is governed only by the demand and supply, and there is no intrinsic value like it used to be in gold. Intrinsic value is not there even in fiat currency, but there is a guarantor. So in crypto, there is no guarantor and there is no intrinsic value, and it is governed totally by demand and supply. The third currency which I would talk is what is mentioned as the fourth one on the screen, digital currency. Digital currency is nothing but the e-currency, which is replica of fiat currency. Fiat is in the physical form. And if that physical currency is converted into e-form, then it is called digital currency. Like you have e-rupee now, and RBI's project is there as the digital currency project. Of course, that is still in the pilot stage and not much progress has happened so far, perhaps because our online payment platforms like your UPI or Paytm or these platforms are so good that we don't feel the need of e-rupee. They are as good as e-rupee. We are dealing with rupee. Of course, it has to go through our bank accounts, but we don't feel any difference between the physical currency and the this currency, because we don't need any digital currency, because this is very, very effective, flexible, convenient. So that is digital currency. And that is also again issued by central bank only. The person who issues the fiat currency can only issue digital currency, which is replica of the fiat currency. So therefore, it is also stable and the value is derived by the fiat currency. That is no need to explain that. The stable coin, which is the recent concept, here again it is decentralized, and instead of RBI, any company or bank or private person can issue it subject to the regulations and laws applicable to it, but it can be issued by banks or other companies or anyone who meets the requirement of the law. Why it has come? It has come to cover up or to because the cryptos had several benefits, but at the same time, cryptos had many disadvantages, particularly speculative in nature. Therefore, it has come to kind of give a better option in digital currency than crypto, because it is relatively stable, rather more stable, because it is backed by the physical currency or fiat currency, and the value is pegged normally against the fiat currency only. Of course, it can derive value from anything, from cryptos, from commodities, from algorithm, but uh, to become more reliable and to become more user-friendly. Right now, out of different stable coins, most of them have been issued against the fiat currencies like US dollar and euros. Coming to the next slide, just to explain this further, major cryptocurrencies and market cap. Cryptocurrencies have market cap of about 4 trillion US dollars. So that's the size of cryptocurrencies. And Bitcoin is what everyone knows as the first cryptocurrency, and everyone thinks that that is the only cryptocurrency, but there are many cryptocurrencies like Bitcoin and the Ethereum or XRP or Tether, or please don't confuse yourself with Tether, because this brand has issued not only the cryptocurrency but also issued stablecoin. So you must, when you are talking about Tether or USDT, you must know, are you talking about the crypto or you are talking about the stablecoin? So like that, you have many others. And right now, there are 17,000 coins tracked, 1,300 exchanges. But the problem with crypto is that it's not very transparent. And because of its speculative nature, there are many hindrances. There are now many issues have been tracked, like use of cryptos by the people who are doing illegal trade, illegal business, or illegal activities. So you'll find that people use cryptos for their red money. I'm not talking of black money. I'm talking of red money, the money by illicit means. The means of crypto is being used, and therefore crypto is being criticized at many places. I'm not saying that all the users are into illegal trade or illicit trade, but yes, the people in the illicit trade prefer now crypto. And I think you might have read the instances where the ransoms were demanded in crypto. And therefore, this currency is being criticized because it's highly in unregulated zone. Before coming to the regulation part, let us go to the next slide and understand the stable coin. This stable coin market is much less as of now as compared to crypto, because the total market cap of stable coin is only 265 billion as against the huge market cap of crypto right now. But please see how it is growing. The growth rate of stablecoin is very, very fast. All legal businesses and international trade are now preferring to settle their account in stablecoin. And you can see the last year's transaction value, and that is $27 trillion. Now, that is huge. That is phenomenal. That if international trade to the extent of $27 trillion are settled in a stable coin, that means it is the currency of the future. It is what is being preferred right now. And yes, out of them, the main is the US backed currencies, the Tether, USDT, and the USD coin. They hold the majority market share. And 80% of stable coins, I've already told you, are backed by fiat reserves. In one of my conversations with Varun and somebody else, these days, all the banks in US have a major department or major focus on this kind of currency. Why? Because suppose Anand Rathi Security wants to issue stable coin, then what Anand Rathi Securities has to do, it has to approach one of the US bank and it has to deposit that amount of dollar uh, in respect of which it wants to issue, on the backing of which it wants to issue the stable coin. So what will happen is the bank would have interest-free funds to that extent, which bank would be able to use for its business, because it is the fund which is being kept by the bank as guarantee for issuance of the stable coin. So all banks have a focus on the issuers and the issuance and Sometimes the bank themselves are the issuers. And with that, of course, I've given here different names and different market caps. But you might not be much interested in that. But the only thing which I wanted to show out of this slide is that how fast it is progressing as the mode of settlement in international trade. Coming to the next one, why people are preferring stablecoin, just for the viewers. Now, right now we have 107 viewers. And for the benefit of viewers, I'm just telling you that the international payments as per the present traditional form, they take 1 to 5 days in settlement, and you have the SWIFT code and you have the correspondent bank. And if your bank does not have the branch there, you have a double or triple layered banking network to settle these payments. And then there is a cost involved. There is currency fluctuation involved because you have to take a call during the working days, working time of or banking hours, or the international trade time, as they call. And then there is a cost involved. In credit cards also, there is a cost involved to the extent of 2, 3, sometimes 3.5%. And for payments also, the cost is involved. And then there is manual interventions. Sometimes the holidays would come in between. You'll make the payment when there is a holiday in India, and then when you receive that payment, it might be a holiday in US, and that might cause delays. And then there is a confirmation. There could be mistakes in giving references. There are some mismatches, of course, not much, but there are, yes, mismatches. So all those problems are there. Whereas in stable coin, it is 24/7. You can settle any time, during night, during day, whenever you want. And it is instant settlement. It's not, it doesn't take time. It is in the moment. And it is directly, it is peer-to-peer. So intermediary or the bank is not involved. And cost of this is very, very less, rather insignificant. And it is completely digital. The other person can keep the wallet having the payment with itself for using it again for making its own payment. And it can be used across the countries, in different countries, without any restriction. Of course, the regulatory restrictions will come to a little later. Come to the next slide, please. So I'll not be discussing much about this, but you must know that in US, there is a Genius Act of 2025 governing stablecoin. And why there is a law to regulate stablecoin in US, so that there could be transparency and the backing, because without backing, nobody, it should not become another crypto. Therefore, there is a law governing this. There is an operational, they talk about operational excellence and consumer protection and risk mitigation. This law talks about all that. Therefore, this is governing what do you call as cryptos of the future, or what do you call as this stable coin kind of currencies. Coming to the next one, Varun might know more about the Genius Act and the nitty-gritties of this law, and we'll ask from him a little later. But just understand, because most of the viewers right now are from India. So you must understand that in India right now, there is no clarity so far as stable coin and cryptos are concerned. So both the kind of currencies are virtual currencies. So only one kind of virtual currency has a legal backing or a statutory backing, and that is e-rupee. Other than that, now they are not recognized in India as legal tender. But you must know that what happened in that 2018, there was a very stringent circular issued by RBI. Rather, this circular bans all kind of cryptos. That was issued in 2018 by Reserve Bank of India, saying that no bank would be permitted to trade, open the account, this, that, several restrictions. But then somebody approached Supreme Court in 2020, and Supreme Court ruled that RBI did not have any right to put such a ban or restriction. And in this judgment, Internet and Mobile Association versus RBI, in 2020, this RBI circular was quashed. However, you'll find that although there is no RBI circular in effect now banning the cryptos in the country, rather, income tax law of 2022 gives indirect recognition of virtual digital assets by giving a different taxation mechanism in the income tax law itself. But it is important that what is happening in practice is most of the banks are shying away from opening an account when they know about crypto, because they think that any kind of regulation might come in future which might require them to follow more protocols, or there could be some stringent regulatory requirements and they should not be missing out on that, and therefore they are shying away from dealing with the persons or opening an account where there is a payment for crypto or there is a receipt in respect of crypto. They rather would like to stay away. That has been the tendency amongst the Indian bankers. And with that, I think I'll come to the panel discussion. And Nikhil, you can just remove the slide so that we can see the panelists right on the screen. And my first question is to Varun. Can you little bit introduce the stablecoin more, because we have a theoretical knowledge in India and you are practically dealing with that in US. You are a banker there and you know a little bit about Genius law. So can you, for the benefit of the audience, can you throw light on?
Yeah, sure. And I think, I'm really blown away by the clarity with which you have explained the different currencies and, how the landscape looks like, which is very, very accurate. And, I'll just add a couple of other points to it before I get down to, the Genius Act and what kind of sits over there. I think we looked at various, I would say, forms of money. So there is CBDC, there is stablecoin, there is crypto out there, there is fiat cash. There is a fifth category which is emerging. You may not kind of see a lot of it in immediate terms, but a lot of banks are also experimenting with the concept of deposit tokens. Now, what deposit token is basically, it's a digital representation of commercial bank money, with the only difference that this commercial deposit or a bank deposit just does not sit within the banking system, but it can also travel on a private or a public blockchain with sufficient guardrails around it. And there are a couple of pilots which are already out in the open, and as time progresses, you will see more bank participation and other institutions looking at something like that. The other piece, which is also important to note, is I was just looking at the Visa earnings, which were announced a couple of days back, and they used the word stablecoin in that earnings forecast 31 times, and that should give people a good amount of indication in terms of the institutional participation into the sector. So you've got likes of USDT, which Sanjay Bhai, you spoke about. They actually have become the third largest buyer of 3-month US Treasury bill, in the last few months. So clearly, there is a lot of institutional interest. There is I would say, a lot of interplay between the traditional finance world and the decentralized finance world. And I'll maybe double click on the decentralized finance world a little bit later. But you know, coming back to the Genius Act, now what's happening is, in the last few years, there has been a fair amount of, I would say, innovation on the decentralized finance side. You've got a lot of fintechs, a lot of neobanks, and the market cap for stablecoin has grown about 260 billion dollars. So this is something which is too hard to ignore. So the purpose of Genius Act in US is really to bring more clarity and I would say certainty around the regulatory aspect of stablecoin, because there are so many issuers out there and there is public money involved as well to some extent. So what Genius Act is really doing is it's defining, I would say some baseline guardrails for stablecoin issuers in terms of licensing, how it will work between Fed and the state licensed stablecoin issuers. It also speaks about the fact that stablecoin issuers are not allowed to give interest on stablecoins in the current context of the bill. And the reason for that is there is this huge number of community banks and other banks who offer non-interest bearing deposits in the market. And the moment you allow stable coins to also pay yield, there might be a flight risk to those non-interest bearing deposits from the banking system. So there has been a fair bit of lobbying on that point before the act was kind of approved. And then it also speaks about how a stablecoin issuer needs to manage its reserves, because a stablecoin is expected to be backed 1-to-1 with a reserve behind it. So it defines, what kind of asset classes stablecoin issuers can get into, which is basically high quality liquid assets with duration less than 3 months, so that you can manage, a market stress event. And that definition, has got a lot of other details, but at a high level, I would say it's a combination of bank deposits, which is money kept for the bank, or US treasuries.
Got it.
And then finally, I think since there are so many stablecoin issuers in the market, there is a need for more transparency. So they need to get audited by a public accounting firm.
I think that's a valid point. And on this point, I'll like to come to Sujan. Sujan, as the currencies have evolved, and from the gold we have come to this, and now digital currencies or virtual currencies. So, what do you see? What will be the currency of the future? Do you think that very soon the paper currencies would become history, and we'll have only virtual currencies? Do you see that as an economist? Or there'll be some other kind of currencies which could evolve in future? So what's your thought on that?
So this is one question which has been discussed widely. And if you look at the demonetization of 2016, in a sense, the currency in circulation was a big issue, that so much of paper currency. But having said that, what we have realized that this is determined more by psychology. For example, if you look at Japan, Japan is a OECD country. And despite that, the use of currency in Japan is very high. In fact, it's higher than India. If you look at the payment behavior in US, credit card is the biggest way the payments are made. But if you look at continental Europe, particularly Germany, debit card is a much bigger way of payments. So I think this will be more of a See, currency ultimately has various roles.
I mean, geography driven in different
psychology.
Different currencies would prevail in different. But what will prevail in international trade?
So I think digital currency, in the sense of a stable currency, has a much better future, because if you look at crypto and all, the likes of Bitcoin and all, see, currency has various roles. One is a store of value, another is a medium for transaction. So for you are referring to is the medium of transaction.
Yes.
I think stable coin or the types of any variant of stable coin, that is going to be the medium of transaction, because as Barun and you mentioned, the speed of transaction as well as the ease of transaction and the cost of transaction, stablecoin definitely is light years ahead of any other form of currency right now.
I'd like to come to Satya at this point, because you talked about value and you talked about that currency plays two roles. One is dealing with the transaction, and the other is keeping your wealth. Now, this is a big question, and I think this is haunting everyone. How to keep your money? Should I keep my money in dollars? Or whether the value of dollar or importance of dollar is going to go down in future because of the virtual currencies, or is not going to be affected because the backing is by dollars or by euro. So what's your view in that?
See, I think first and foremost, crypto, or for that matter, virtual currencies as a storage of value, there are a lot of question marks coming in apart from stable and CBDCs. And the reason is simple, because right now the basic question is on the fiat currency itself. So if the origin of the currency itself is being doubted now after so many years, Bretton Woods happened way back in mid 70s, and when the fiat currency got introduced, and now people are doubting whether these currencies are going to remain in the shape and the size the way these currencies have been issued. I think we have seen enough and more debate going on, whether China will be able to protect the value of its yuan, what's going to happen to the US market. Look at the way the UK economy is right now going through its own challenges. Most of the developed country, which by virtue of their colonial power, they were able to command the fiat currency issuance undisputed, is being put to a lot of question mark. And I think if the fiat currency itself is going to be a challenge, any other derivatives of fiat currency, whatever shape, size, and form that we think about it, is going to be challenged.
Satya, I would like to rephrase my question again. So what's happening around is that US is almost dominating because of its dollar power and in the international trade. And do you see a threat to the dominance of US dollar because of emergence of virtual currencies over the period? That dollar, or because the dollar would not remain that important, therefore US would not remain that important. From the dollar perspective, from the consumption market, yes, you cannot beat them. But because of the currency right now, they are dominating, and whether there is a threat to US dollar because of emergence of this kind of currencies.
So let's be very specific. If I look at 10 years ahead, do I need to keep my fiat currency, US dollar, as a fiat currency, a storage of value for me or somebody that I know of? I would say no. And forget about, I'm not even coming to the virtual currencies in whatever shape, size. I'm only saying US dollar as a storage of value, as a currency, I have a significant amount of doubt whether it can survive 10 or 15 years down the line. That's
I
number
think
one.
that should be very useful point for the viewers, and that's one of the perspective which is going on in the market. I know that there is another strong perspective which is just opposed to this, but yes, this is also a perspective.
This is one thing. I have my clarity. I don't know whether I'm going to be true or not. That only time will prevail. That's my view on it. The second piece is, if that be the case, then do we still need to rely on the derivatives of the fiat currency that itself we are doubting? Currently, the way that whole landscape is coming up, stable coins have already marched ahead. And I think given the kind of complexity that we have on the SWIFT system, which is being doubted now, I mean, there is a dominance of SWIFT is itself being challenged like the dominance of fiat currency. Everyone is looking for alternative, and somehow stable currency have come as an alternative to it. But please keep in mind that stable currency so far, 98% of the stable currency issuance or 99% has happened around US. So it's like whether you are dealing in SWIFT, which is practically very inefficient, poor system to lean on, or you come to stablecoin, the US geopolitical risk for stable currency is still embedded into stable currency there. So I personally believe that a lot more stable currency issuance will happen across jurisdiction, and the form of stable currency that we are going to see outside of US is going to be more around CBDCs and then stable coins, because of the government may not allow private sector like the way US has allowed. And third and very important aspect is that right now what is happening in stable currency is mainly because of the challenge the US dollar is facing or US treasuries are facing. There's no buyer left practically who can absorb it. So essentially, increasing the size of stable currency market back to US dollar is in a way of distributing the US treasuries across a wide spectrum of people, because that's one more dose of fiat currency in the form of virtual currencies being loaded. So there are a lot of moving parts, but stable currency as a mode of settlement is going to grow. However, there is one risk that we need to keep in mind, that trade settlement largely has got a lot of AML issues, anti-money laundering issue, and stable coins somehow are not being treated as a very safe jurisdiction right now from an AML perspective, although it may be an efficient, you can say, transactional settlement mechanism.
Thank you, Satya. And coming to Rathi sir now, on the same question, a supplementary on the same question. See, $27 trillion is a phenomenal amount. So far as settlement of international trade is concerned, are you aware of some of the Indian industries who have started using this already, irrespective of the regulatory hiccups? And because there is no yes, no, there is no regulation so far. But are you aware of the companies in India who have already started dealing with this? Because how I look at it is, regulation has to approve it maybe a day later or day earlier, because if it is a valid legal tender in US and Europe, we cannot stop ourselves from entering this, and they'll be permitted eventually. So whether people have already started recognized, because most people may not be aware of this concept. So what do you think in bigger industry, because you are day in and day out dealing with large corporates? So from SME viewpoint, I'll be asking Gaurav the same question, whether he's aware of this and whether he is aware of his friends dealing with stable currencies or payments in that. But from the viewpoint of large corporates in India, have they started this?
Sanjay, good question. I'm frankly not aware anybody doing it for the reasons, I think if you have to, there is no system of, if you get it, how do you redeem it to the banking system? So unless until you have that system, somebody is only doing both side trade in dollar, perhaps he may use stable coin. I think why it is becoming popular for obvious reasons, as you mentioned and Sujan also mentioned, of speed and cost. These two considerations, obviously, and the stable coin is supposed to be very safe because it's backed still, and with the Genius Act coming into force, it still give more support to that concept. See, ultimately, it is the use of blockchain technology, which is making more and more decentralization. So I think ultimately, I feel that the stable coins will get acceptance, maybe legally for time, but because they're at least, it's a completely bad thing. There's another aspect which I think perspective I'd like to bring to notice. You see, as the things are unfolding, the importance of US in the global market, there is a lot of de-globalization happening. Then importance of US in the overall world economy is going down. The Saudi Arabia has, that practice over, that they have to do in dollars. And a lot of talk is now going on de-dollarization. Okay. Also, a lot of talk is going why Trump is also annoyed with the BRICS concept, whether BRICS can bring a separate currency of its own. Euro tried to some extent, it succeeded, not fully. So I think there are a lot of things which are going to happen with this technology. The key thing is blockchain technology will make it easier, faster, provided the safety is there. As far as crypto is concerned, obviously that's more of an investment tool rather than the transfer tool.
Rather speculative
Correct.
investment.
There's a speculative thing. But the stable coin, I think as a concept of digital currency, tomorrow, who knows that China, India will like to do most of trade in their own currency. And that could happen. Already we do like with Russia, if it is rupee trade. And then there, even the digital currency will become very useful. Because key thing, one constant why these things have come is because the time which is taken to transfer the money and the cost which is incurred. So it's a very efficient mechanism. To my mind, it will happen, but in India, I'm not aware. And I think it's not so possible, given the legal environment which you have, the view of RBI, view of the government. Even the Supreme Court order has said that. But everybody is aware that you can't go on the wrong side of any regulator. So you have to be. I'm not aware of any company Even bigger companies.
Right now, it is not being used as you suggest, and therefore, I think Gaurav would also endorse this, that the trade industry to which he belongs, or MSME sector, might not be using, although there could be a potential use, but they might not be using right now. Is that okay? Is that correct, Gaurav?
Yeah, absolutely. So, Jaji, I don't think any company I know is dealing stablecoin at the moment. But yeah, definitely it is here to stay because the government is pushing in and this new act coming in, it is making it more secure to deal instead of a open end technology like a blockchain or the Bitcoin. So, definitely it is here to stay. But the question is, when would the Indian regulator legalize it? Sooner or
Right.
later, they might have to.
Right. So, Varun, a last question on this to wrap up this issue before we take up the next issue and trade tariff. And see, right now, what's happening is it is, as Satya rightly told, if you don't believe dollar, then how could you believe the digital currency which is issued on the backing of the dollar, right? But at the same time, you can have several private issuers, and who knows in the future the stable coin could come which would derive a formula from three currencies. Let's say a formula which derives its value on the backing of dollar and euro and some other currency. And therefore, like Rati sir was saying, BRICS is thinking of a third currency or whatever. So can, if the momentum has started, stable coin. So US has only started the momentum, but it is the world who has to ultimately retain the confidence in whichever currency it wants to have and then deal with that. So do you think that gradually there could be all countries issuing digital currencies, all kind of private issuer issuing digital currencies backed by different currencies? And then how do you think that, suppose I have a currency which is having backing by US dollar, and you have a currency which is backed by euro, and we have to swap it, we have to exchange it, I need to pay to you. So whether there will be cross swapping, how the cross swapping would happen, and whether it is happening right now?
Sure. So I think a lot of questions layered into that, Sanjay Bhaiya. So let me try and break it up into three very quick responses. Just in the interest of time. So I mean, I completely agree that the dollar obviously is being challenged as the currency of the world. And China in the past also has tried, I would say, to internationalize RMB as a global currency. But the challenge most of the other currencies have come across, in my view, is like a lot of companies will bring RMB outside of China. There are ways to do cross-border transfers on that currency. But eventually you have to off-ramp it, which is converted back into a fiat currency. And you would convert it back into a fiat currency where you've got very liquid and deep asset markets in place. So what we really need to think about is not necessarily the currency, like in which the trade is happening, but we really need to think about the currency to which these stable coin issuances are pegged to. So today, 99% of the market is with USD. But, if you look at, some of the other countries, Hong Kong, Singapore, Japan, EU has MICA regulation. They've all come up with their own stablecoin regulations, and they would eventually want to promote their own currency pegged stablecoin. So, it'll be interesting to see how this evolves over time. And going back to your question on, does it make sense for somebody to swap, let's say, a euro stable coin with a dollar stable coin? And in my personal view, at this point, it is going to be super inefficient because your, FX markets, they are a lot more liquid, a lot more, I would say, deep at this point. So, in a market like that, if you try to use stable coin to, manage your exposures or convert them, you will end up paying a higher basis point risk, and you'll also pay a higher liquidity premium compared to, let's say, FX done in a regular market. But as this market kind of deepens over time, the arbitrage or the spread between the two worlds might reduce. And that's something which people have to keep an eye on. But at this point, I would say we are at a very early stages of this. And going back to the institutional use case, right, potentially where this could lead. And I'm aware of a lot of initiatives in the pipeline where companies, institutions are experimenting with use of stablecoin in areas like cross-border remittances, high-speed trading, intercompany trade settlement without kind of going through the slower banking channels, using it for placing margin calls when you are dealing with digital assets per se. So those are, I would say, broadly the areas where we will see things kind of moving towards, and more to come on that.
So thank you, Varun. I think we will switch now to the second topic, because the purpose of keeping the first topic was introduce the audience with the new concept, because this should not come up to them as a surprise that now there is a new mode of settlement in international trade, or there is new mode of keeping wealth, or because it is speeding so fast, the growth is so fast that we may not realize that in next 2 years there'll be this $27 trillion is likely to become 50 or 60 trillion dollar. So every one of us would come across, whether it is a CA's function or a lawyer's function or a merchant banker's function or investor's function, they'll come up with this and the challenges relating to this. So everyone must know about this. So I think the session has served the purpose of introducing everyone to this new concept so that they can go back home and understand more about this at their own. Let us come to the second topic, because it is already half time. And I'll give you a brief in 7 minutes, and then we'll discuss with the panel. So everyone knows about the tariff war. Everyone knows that what India has been slapped. It's not penalty. It's not penal in nature, although they have used the term as penal in nature, but it is a tariff law. So tariff is like customs duty. So it's not penalty on India. It is customs duty. So before you look at the left-hand side of the slide, which you already know, India, Brazil, or Syria, or in which country what has been slapped, just see at the box which is on the right-hand side bottom, that what justification US is giving internally, what the justification they are creating to levy a particular tariff, and how they have calculated this. So there is no rational basis, but what they are saying, we must know, we must understand. So when we are talking, this is in the context of India. So when they talk about India and US trade balance, what they say is that in financial year 24-25, US exported to India goods worth $45.3 billion, whereas India exported to US $86.5 billion. And therefore, if we see only goods, there was a deficit in US account to the extent of $41.2 billion to US. And this is for us, it will be a surplus. For US, it will be a deficit. So in services, it is just reverse. US has exported the services worth $28.7 billion, whereas we have exported the services worth $25.5 billion. So overall, whether it is TCS or Infosys or all kind of services taken together are just $25 billion, whereas US, whether it is Google or Facebook or whatever services they are giving to India in the forms of their tech companies or any other kind of services, they aggregate up to $28.7 billion. And therefore, US is gaining on this account. On services trade, US has a surplus. And therefore, you'll find that on services, there is no tariff levied by US, because US feels इस पे टैरिफ लगाएंगे अगर $25 बिलियन पर, तो हमारे ऊपर इंडिया लगाएगा $28 बिलियन पर. So there is a net loss to the US if they go for a tariff on services. So they have chosen to levy tariff only on goods where their export are less and our exports are more. So that's how they are. So they have ignored services. They have taken into account goods, and then they say, how do we make up for this international trade deficit? And for that, they are levying that 50% tariff to compensate for that. Coming to the next slide. So we must all know that it is not on services. It is in fact not on all goods, but that will come little later. This we must know that India's top export destinations are this right now. Yes, we have to agree that highest exports are to US, and then there are other countries. UAE is the second highest. We must know about that. The next slide. India-US trade evolution is like this. Now, what you have to see here is how the trade has evolved over the period. What was the share of India share in US trade, how it has grown. So we have to see all that. And GSP is one important thing with which I'll be dealing in the next slide, that till 2018, India was getting the benefit of what is called as generalized system of preferences. GSP benefits we were given by US, and that means that 3,500 items produced in India, when they were exported to US, there was zero duty till 2018. There was zero duty because GSP benefits were available. And that was valuing about $5.8 billion annually, covering 12% of India's exports. So that was huge. And please mind, sometimes we feel that Democrats in US are against countries like India, and the Republicans like Trump are India's friends. But see the progression it has happened historically. In 2018, what happened? When was Trump there in the first term? He was there from 2016 to 2020. Our first rift or kind of war started when Trump was there in 2018, when he invoked Section 232 of US law, when it is considered that there is a threat to US, economic threat to US because of other countries. He invoked that section, and he imposed for the first time, he imposed duty of 25% on steel and 10% of aluminum. And there was an impact of $1.14 billion. This is what Trump did. So Republicans did, not the Democrats. And then in 2019, what Trump said, that all these countries like China, India, they are saying that we are developing nations, so therefore we should get GSP benefits. But on one hand, countries like India are saying we are developing nations. On the second hand, they are saying we are going to become third biggest economic power in the world. So what is this? So why should they get the benefit, even if they are developing nations? Because if they are becoming an economic power, they should not get the benefit. So he entirely terminated GSP. So that was a surprise. And this is happening. We must all know that started in the first term of Trump, not now, in 2019 itself. And he ended the entire list of duty-free exports from India. So that was eliminated on 5th June 2019. And then even India retaliated on 16th June 2019 by levying duty on US goods. And that happened. We might not know, and trade might not know, but this trade, the persons affected are already aware of this, but common people might not know this. In 2020, we retaliated once again. India retaliated once again by levying, in income tax law, there was an amendment called equalization levy in India. And that was a 2% levy on the companies like Google or Facebook or Meta, or all these kind of tech companies. There was a income tax on India to the extent of 2% of the transaction that was levied. And this matter was taken very seriously by US. And rather, one of the officials published a paper on this, that and they took this matter to the World Trade Forum, WTO, and they said that what India is doing is India is levying this discretionary duty on US. And we said that we are not levying on US. We are treating all nations equally, all countries equally, and we are levying on all countries. But then in response, they published a paper and in 2020, and what US says that what you are levying on 72% levy is from US firms only. So indirectly, what you are targeting is only the US firms. You are not targeting anyone else, but in fact, they are the only service providers. And impact survey summary is already given on this slide. I'll not like to repeat that. So this is what happened in the first tenure of Trump. And see how the second tenure started. And before that, rather, there was some respite in the Biden's tenure. And yeah, that's very interesting to know that when the tenure of Trump was ended and Biden's tenure was started, thereafter there were several things which were kind of resolved, and the war was kind of not, I would not say it got completely reversed or eliminated, but there was a relaxation from both the sides in Biden's term. And you can see on the board that we suspended the equalization levy in Biden's term, and US also suspended the tariffs on several items. So there was a solution from both sides. Coming back to what has happened in Trump's second term. And first of all, when they met the Prime Minister Modi and US President on 13th Feb 2025, what they announced is something very phenomenal. Mission 500. They called it Mission 500, that our trade should reach $500 billion by 2030. So everyone felt like the trade would be preferred, India would be preferred, because Trump is a good friend of Modi, and therefore they have announced this, and there'll be measures to enhance the trade to that level, and they have already set the target. But then what has happened, everyone knows that how the tariffs have been levied, how they were put on hold, reciprocal tariffs were levied, and thereafter what they call as Russia oil penalty on 6th of August. What happened? Everyone knows about that. And I'd not like to deal with this further. I'd not like to deal with the solutions which are ahead. There are several options, but everything right now is a black box for all of us. And as we are talking, there are several clippings which are being released after 15th August meeting of Trump and Putin. And there are some clippings on the positive sides that Trump could rethink of the levy imposed on India, this next 25%, not the first 25%. He could rethink in next 3 weeks. But on the other side, there are some other clippings. So it says that the meeting has not been concluded on a very good note. It is just one of the series of meetings which has happened. It can at the best be termed as a meeting on a positive note, is exploring the scope for further meetings. That is all. So with that, I'll take the floor to the people who are experts here, the panelists who know a little bit more than the audience here. So my first question would be to Rathi sir and Sujan both. And see, you are dealing with the wealth, you are dealing with capital market, you are dealing with investments. So what do you think from your perspective? What is likely to happen in India because of this? Whether there'll be a capital flight, because many of the foreign institutional investors have withdrawn their capital. So what is likely to happen? Or this is just a transitional phase and we can see, anticipate its reversal in near future, or it'll totally depend upon Trump's headline announcements, or it is just a knee-jerk reaction which will settle down in weeks to come?
Okay. Sanjay, first let us understand the philosophy of Trump is not new. I think, and also because his entire political, base has been that we will bring employment to US, and that's why we'll put, high tariffs. The employment has been exported outside America. That has been the entire thesis, which he has been doing not now, even before he got elected. So I think, and also there is a sign of de-globalization, as I said. There is a protectionist environment everywhere. In fact, China has been the master in that. They have been so protectionist. They didn't allow, imports to come easily, and they had the highest export base. So as far as the impact is concerned, first of all, let's put in the perspective the relative situation. What would be the tariff on Indian goods versus other competing countries? If it is 25% on India and 28%, 30% on China, I think it gives us a relative benefit. I think that additional 25% is only a hawkish thing, which is trying to, he said in so many words, that I put it on India to pressurize Russia to come to the table, which has happened. And still it has not been made effective, and I don't think it will be made effective. As you know, Trump, he is a deal
You
maker.
think purpose is served, so therefore the purpose of tariff is over now?
Yes, so actually that objective which he wanted has been served. So I don't think that. And secondly, it depends on, it's not, absolute on all products. Even today,
Yes.
more than 50% products are
Yes. You are right.
really not covered.
Yes.
And largest, what gem and jewelry will get affected. But if you take the next few products, if it is electronics, Apple, if phones are to be sold, they are not going to get affected.
Yes.
So I think, number one, to my mind, the impact on capital flight comes depending on how does it affect your economy. So how much is going to be effect on your GDP? And the worst estimate which have come that GDP might be affected by 0.3% or by 4%, which is still, in spite of that, India is going to be the best growing economy. So, and flight of capital, has happened even when there was no tariff. So I think this is the relative view. But my view is that money has bound to come to India. Saving chases earnings. And if the profitability of GDP growth in India is going to be higher, and profitability of the company is going to be higher, the money will come. So I'm not at all worried about flight of capital at all. In long run, I think so long as relatively we are not at disadvantage to the competitive countries, I don't think it's going to affect us at all. To some extent, sometimes it will make our industry more efficient. Either way, not only tariff on us, but we may have to reduce the tariff on goods coming from US. There's a more pressure on that, and that will have an impact. But we have seen that industry becomes more efficient when pressures come. In 91, people thought that if you open up the market, the industry will just close down. But we all prospered. So my view is, let's not be. I think there is undue worry about it. I'll not be worried at all about the both capital outflow as well as about the economy of the country.
So in longer term, there is no worry, and we should not worry about flight of capital and what FIIs are doing right now. Yes, Sujan, do you have the same view? Would like to endorse with some other perspective?
So what I want to do is that rather than talking too much, let me show you a slide which will explain why India receives the kind of money which India receives. This is the dollar return on Nifty 50, and compared to that, other major global markets. So this is if you look at in the last 25 years, annualized average return on Nifty 50 in dollar terms has been 13.6%, and which has been absolutely the highest among all the major countries. If you look at US, it has been 7%.
Oh, double than US.
Yes, if you look at this is the last 10 years, again, India's return has been the highest in dollar terms as compared to any other country. and this is in the last 5 years. So whether you're looking at the last 5 years, 10 years, 25 years, and in fact, if you look at individually from anything from 1 to 25, 70% of the time horizons, Indian equity has given you the best return in the world. So
Oh,
the money which comes to India doesn't come out of love and affection. It comes because, as Rataji mentioned, it comes
the
because
investor
Indian
gets more
Indian
return.
companies does better. So therefore, so long as Rataji rightly pointed out that so long our macro fundamentals are strong, so long our corporate fundamentals are strong, and what has changed in the last 10 years is the domestic flows towards the market. Last month you got 47,000 crore. 47,000 crore is equivalent to uh,
$5 billion.
almost 6 billion,
Five.
$6 billion. There was an outflow of foreign money, which is which for the whole year is lower than that. So the bigger point which I'm trying to say is that the domestic flows have become, the SIP amount has become 10 times in the last 10 years. So therefore, I think this is actually a good thing. The share of the foreign money in the Indian market has gone down. So our dependence on the foreign money has gone down. In 2008, in 2011, when FI money went out, Indian market corrected very seriously. But in 2018, 2022, 2025, when the foreign money is going out, market is still going up. So therefore, I just wanted to make this that I don't expect the foreign money will go out, because if the returns are like what I showed you just now, there is no reason why it should go out. And so long as your fundamentals are strong, so long as your domestic flows are strong.
Whether it is Trump or it is a Republican or Biden or Democrats, it will not make any difference so long as the Indian industry grows and it earns well, and it has demonstrated that it is earning better than US, and therefore we are, for investors, we are the first choice.
Absolutely.
Yeah. Varun, sitting there as a banker in US, what do you think, whether the investors' choices have changed these days in last couple of weeks, or they are still bullish about India? Because you are in touch with many investors as well. So what do you think? What's the uh, something which is undercurrent?
Sure, Sanjay. So, and I'll also kind of add a little bit of perspective around. I think we spoke about, how Trump and the U.S. Administration has been, thinking about things. And I'll throw some interesting numbers over there just to add to that discussion. And quite frankly, none of us should be surprised with what's happening in the market right now, because if you go back to the Trump's election manifesto, it was very, very clearly laid out that he's going to work on reducing taxes in US, he's going to work on immigration, Doge, and all of that is going to translate into about $10 trillion of deficit in US. And the plan was to really fund about $2.7 trillion of that deficit out of the trade measures and the tariff measures. So, I think a lot of what we are seeing playing out is really an outcome of that election agenda and what the administration is trying to do, right? Now, coming to, and I'll also say that, to some extent, this is kind of working from purely from a math standpoint. So, on an average, US would collect $6 to $7 billion of tariff. It's kind of jumped to 26 billion. The average tariff rate before all of this started was about 2.3%. It's now 18%. And at that run rate, US would collect about $500 billion of tariff every year, which comes close to the 2.7 trillion number I spoke about. How corporate America, or like rather, I won't call it corporate America, but multinational corporations who are, working in different countries, they have to take a much broader view on these topics. And to Rataji's point, I think to a lot of extent, this is also blessing in disguise. It makes countries more resilient. It makes companies more resilient as they think about, their global operations. Having said that, my observation has been whenever there is uncertainty in the market, I do see a slowdown in the new capex. and it also rerouting to locations. The international trade is literally like water. It will flow in the direction of path of least resistance. So, I definitely see flows moving in different directions, in longer run based on how the tariff situation.
All of us understood your point, but please excuse me for asking a very personal question. Suppose you save 2 crore this year, where would you like to invest, India or US?
I think I would hedge my bets. So it's no longer, going to, I would say, the cheapest place of
Yes,
manufacturing.
you have
Or
said that India's story still makes sense. Would you put all entire 2 crore in your Indian investments, or do one, or do you think that is the right time to invest in US? What's your personal call for you? Don't talk like a banker now. You are investor also. So would you invest
well,
your
as an investor, I'm fully kind of, I'm equally invested in India. So I definitely, have a pretty bullish view. And, I really hope that the
So
corporate.
should viewers take this that out of your 2 crore, you'll be investing 1 or at least 1.5 in India?
Okay, firstly, the 2 crore is a very overstated number. I don't think I'll, have that kind of money. But yeah, if I have it, definitely I'll put more than India.
All right. So my next question to Gaurav. Gaurav, this MSME, I think, is one of the sectors which is impacted because of the tariffs. And you yourself have your own MSME, and you day in and day out sit with many of the entrepreneurs which are leading MSMEs. How do you think that what's going to happen because of this, and what has happened? Can you give a correct picture or perspective what is being talked amongst MSMEs about this, about the trade? Are they thinking of redirecting their exports? Are they thinking of making some other market? Are they thinking of doing some other businesses? What are their plans? What are they are thinking?
So I think Sanjayji is still there is a lot of water to be flown because this 25% additional tariff,
I
which
have heard a lot of orders have been cancelled. I've heard that
yeah, yes.
many of the orders have been put on hold or they have been cancelled. So how do you, because you are the real affected person. So
so to put the perspective into place, definitely orders have been put on hold rather than cancelled because everybody wants to just watch it, wait and watch what happens on the 27th of August for the remaining 25% tariff coming on play. I was just reading a news article hour back where Trump has made a statement saying no need of additional tariffs for the oil purchasing nations from Russia. So I hope something positive comes out of it. But otherwise, yes, MSME is definitely getting affected with this. But if you see both sides, there are only 3 or 4 sectors which are getting affected. One is gem and jewelry, uh, garments, and a bit of handicraft. Those are the industries which are mainly hitting the hard because rest of them are most of them like pharmaceuticals or metals or minerals are out of the duty structure in any case. So what the industry as such is looking as some relief package happening from the government where they want that obviously we cannot expect that we can find an alternative market so quickly because the trade is large, so it will take time. But yes, for the short term, government has announced a new scheme or package for the exporters which they are planning to roll out in September. So everybody is waiting for that what would that be. It could be maybe some kind of extension of a credit guarantee scheme, some kind of a subsidy which people are talking about. Also, interest subsidy. Also, they are expecting that the government will accelerate the process of GST refunds to ease their cash flow. Some interest subsidy comes in. Also, the how during the COVID times the Prime Minister had rolled out this specific scheme to subsidize the wages. So in skill sector, how can wages be subsidized? So all these talks are happening, but definitely the industry is getting hit in a shorter term, and there is not much of thing which is in our hand. There is a lot of representation which are happening at the government level, where we are saying that we need to fast track the tie-up with various nations, which is EU, especially because with EU we are seeing a large potential of close to $16 billion, which could be grabbed immediately. Also for UAE, and so various talks happening there. A lot of representation going to the government, but yeah, in a shorter term, they are hit hard. We need some. We're hoping for this scheme to roll out quickly in September, uh, and let's see if government definitely will give some kind of relief for the MSMEs in a smaller term. But if you see it in larger term, definitely we need to look at different markets. We need to look at products where we are not the cheap alternative of the world. We'll have to scale ourselves and get into value products. We'll have to scale ourselves and look at markets like South Korea and Japan, where we get more value added on our goods rather than being price competitive with Bangladesh and Vietnam.
Right. So, John, I'll come to you, and from an economist point of view and a prudent diplomat's point of view, what do you think? Would India like to knock the doors of White House? Because what we are gaining or saving out of Russian oil is about 7 billion US dollars. Whereas what we are losing is business worth $87 billion. So, would it make sense to knock the doors of White House and, forgo the savings of Russian oil? Is India likely to do that? Or no? To save the exporters, or as the Gaurav says, government would be exploring the other avenues, and they'll save this also, and they'll find out a respite for the exporters as well. What do you think is a better sense?
So, so far as the choice is concerned, in fact, I was doing back up the envelope calculation. Our savings because of the Russian oil import is not exactly $7 billion any longer, because the discount which we are getting earlier has gone down substantially.
Is it
So
much
the
less? Much
overall
less than
savings
$7?
is less than $2 billion.
Oh,
So obviously $2 billion is too less an amount. But having said that, I think. India obviously wants the India-US trade deal to go through. And I think there are certain low-lying fruits which we can offer to US to see. Ultimately, you have to understand the way Trump is reacting. His ego has got hurt. And that's not necessarily on the context of tariff. We know his claim on ceasefire, and that is something which started turning the thing. So I think at the end of the day, you have to understand US is a 29 trillion economy. You have to understand 70% of the global financial market is in Russia, is in US. So therefore, India has to do a tightrope walk. India has to offer certain concessions to US without compromising the national interest, and I think India is pretty capable of doing that. So I think that there will be a negotiated solution. I personally believe this 25% penal tariff won't be effective from 27th of August, and in fact the 25% reciprocal tariff which has been announced, I think that will also be partly rolled back once we reach the trade agreement. My own estimate is that it will be between 15 to 20%. So therefore, I think a lot of things can change from here, and I think that things will change for better. But having said that, what Trump has done, that has actually shaken the kind of India-US relationship which has
got your point, Sujan. Rathi sir,
Yeah.
On this,
One point I just want to quickly
yes,
add.
I'm asking a very pertinent question on this itself. Now, Sujan says commercial sense or the economic sense is that हम भूल जाएं रशियन ऑयल को और नेगोशिएशंस करें, ट्रम्प के साथ हाथ मिलाएं और इंडियन इंडस्ट्री को सेव करें। और साथ में उन्होंने ये भी बोल दिया अब ये ज्यादा तो ईगो की लड़ाई है। You might have heard the Prime Minister's speech on 15th of August. What do you think? Because he indicated something that, GST में हम टैक्सेस कम कर देंगे, indirectly hinting that इंडिया में ही इंडिया का मार्केट बना देंगे और something, something, something. So, do you think that from this ego, this fight of ego, if it is that, it's going to sustain for long, or they'll both become businessmen very soon, because 27th August is just what, 10 days away?
Can
So-
I make a point, Sanjay?
Yes,
I think, you talked of the diplomatic view, which is very important. I think many people feel that, why didn't we say that, yes, Trump really negotiated the deal? But the critical point is that the moment you accept this, your sovereignty, tomorrow they'll say, okay, let's do the Kashmir, let's do this. I think very important point from India's angle, which to
yes,
my view rightly taken, is
yes,
that, I think we hear everybody, but finally we can't say that it has been done. And that
yes,
has hurt the ego, but that is, I think, the right thing to do. And in long term, these egos are short time. Ultimately, it is the business interest. He is also businessman, and he
yes,
understands what is in his interest. So,
yes.
to my mind, these are passing things. They will pass by.
So we
I,
cannot, what you are
yeah,
saying is, whatever may happen to the trade, plus or minus, profit or loss, we cannot surrender to the bullying by a very strong nation, because then they can use it at some other time for some other thing. Yes, I think that's Satya, would you like to add to this or endorse to this, or what do you say?
No, I fully concur with what Rathiji just now mentioned. And I personally believe the total impact on our export pool is roughly in the range of around 15 to $20 billion. And the biggest impact that we have right now, if you look at it, is in the garment sector. Okay, so Tirupur, Surat, Jaipur, and some of the other places, Noida and all, are significantly impacted. And while in terms of size, it's not that big, 15 to $20 billion export shock, you can easily absorb by pushing something else. However, the impact on labor force is where the significant amount of, so it's directly now impacting a large pool of employment there. So I think we'll have to find a new market. I think somehow we have not
Coming
focused.
on your this response, coming back to Rathiji, see, because of this, suddenly India-China trade has surged to $215 billion. And as Satya says that we have to find other markets, is China, this deepening relationship between India and China, is sustainable in long term? Do you think there is this, because of this, we found a better solution which is going to be sustainable in long term?
Sanjay, I think, long term, it is the economic relations which really decide the political relations ultimately, where is the interest of people involved. And I think we cannot see where India and China will not remain bigger, because they are the biggest, population countries, where the biggest demand is going to happen. If their GDP is growing, our GDP is going to grow. I think, ultimately, whatever happened on the political side, gradually, when economic relations built up, then political relations will also change. So my belief is there, and actually, India coming closer to China just in last 2-3 weeks, the signals have been given, that if their foreign minister is coming, we have made open things, visas have been made open.
Flight
I
is
think,
again starting.
yes, so
Right, yes.
ultimately large population countries will work together, whether it is India, China, Indonesia, Brazil, because that's where the future, or Africa in long term, where the demand is going to come from. So I think relative importance of US in the international arena is only going to reduce in years to come.
We
Okay,
should indirectly, your advice is we should not too much depend on one country, so that
sure.
these kind of situations don't come, and we don't bother about these kind of sanctions or tariffs, because this is not sanction, this is actually tariff. And we have other countries and similarly strong countries like China,
And
right?
Sanjay, Indian entrepreneurs are very smart. They are very strong. And you'll see next, impact of this thing next 3-4 years. The entrepreneurs will also diversify their risk and put, capacities in different parts of the world. So I
But
think
but
all the challenges help ultimately.
you are right. But Gaurav, do you think that we are making new friends? Will US also make new friends who will be our competitors and our trade would be shifted to them? Do you think this is happening on the ground that some orders of India which have cancelled or postponed have now gone to Bangladesh or Pakistan or Vietnam or some other country in textile particularly?
So two things, Sanjay. I'll just first add on the last point which was discussed. I think well discussed, but question is that our energy security is something which is very, very essential for us. And taking the bully of one country becomes very difficult, and we cannot stop the Russian oil purely because we are totally dependent on OPEC and US mercy. So I think it is strategically very important for us to not discontinue that. To your question that the trade is shifting, not as yet, because in any case, with the 25% tariff, assuming that the 25% penal tariff will not come into play, everybody is still waiting and watching what will happen. But definitely, if on 27th the further 25% is rolled out, India is definitely going to lose business to countries like Bangladesh, Vietnam, and other surrounding countries we can offer.
अभी अभी यूएस में स्टॉक पड़ा हुआ है, जब स्टॉक खत्म हो जाएगा 90 दिन में तब मालूम पड़ेगा कि क्या होगा।
करेक्ट। और प्लस क्या है कि इन्होंने जो शिपमेंट ऑन द वे है उनको भी ड्यूटी एग्जेम्प्ट किया हुआ है, तो देयर आर लॉट ऑफ शिपमेंट्स व्हिच आर ऑन द वे, तो दे स्टिल हैव स्टॉक फॉर कपल ऑफ मंथ्स बिफोर दे हरी अप शिफ्टिंग
Because of the announcement of tariff, everybody imported in advance in US.
Correct. So we are still waiting on watching what rolls out on 27th.
Now, because we have only last 5 minutes, so I would like to ask the audience if you would like to ask any question from any of our esteemed panelists, you are most welcome. Any of you may raise hand and then ask the question. I have given the instructions. Now you can unmute yourself and ask a question. Yes, from the audience. Anybody from the audience?
Well, I endorse the view of Anand Rathi ji and Satya ji.
Yeah, Mr. Dandania. Yes. Sanjeev ji, you have a question to ask. Sanjeev ji, I can see your picture.
Going back to the first topic, I'm still very confused about the stable currency. I mean, the main stable currency is USDT. And while we say that in respect to the US dollar and the issuer is required to keep the reserve. Now, is it that they have to keep the 100% reserve with the US banks? And
Varun, you need to answer this.
Yeah, Sanjeev ji, I can take that.
Yes.
So under the current Genius Act regulation, the money can be kept with any commercial, bank. So it could be a US bank and a non-US bank as well. But as far as the treasuries are concerned, the securities, right now what it says is the money should be invested in US treasuries. And if it has to be invested in treasuries which are issued by other governments, then it will need to go through an approval process or a review process. So that's where things are at this point. And, both USDC and USDT will have time to comply with that, if they want to continue as regulated institutions here in US, they'll be given a 3-year time to get to that point of compliance.
But is it 100% backup? I mean, in whichever US Treasury or through whichever bank
Yes.
it is.
It is 100%.
It will be
right now, it
1-to-1
is
back.
1:1. $1 equals to 1 coin. So if you have 1 coin, there is a backing of $1. So it is right now 100%.
All right.
Yeah. So security is 100%. Yes. Anyone else asking question on first or second topic? We still have our panelists with us. Sanjeev ji is doing a lot of international trade. He is based out of Dubai, but he's doing not only trade with India, but also trade between different nations.
I have one more question here.
Yeah.
Since this USDT is issued by unregulated private platforms, even if there is a one-to-one backup, how is it, really assured?
Yeah, and I think the regulation, and that's exactly the reason for the regulation. But you're absolutely right. It still stands the risk of depegging. And actually, depegging for USDC, for example, happened in 2023, where a part of the USDC reserves were kept with, SVB. And when there was the regional bank crisis, it got depegged for a brief period of time. So there is that risk involved. And I would also say two other things which have to be kept in mind is they're not FDIC insured. So if you're keeping your money with them, it's not FDIC insured. And if there is stress in the market, these issuers don't have access to the Fed discount window, which is typically given to other banks in situations like those. So those are, I would say, a couple of other areas which have to be kind of well covered under the act and regulation for people to get more comfortable using it.
Now, we were discussing about how the US dollar would behave 5 to 10 or 15 years down the line. But if the primary stable coins are going to be pegged against US, I mean, so far we have not seen any major stable coin coming against any other currency. And in case, as it was suggested, that we might see a stable coin coming
Sanjeev
with
ji,
a
against EU or against the euro
basket of
also.
three currencies.
Against euro also, a stable coin has already come.
Okay. And if it comes against a basket of currencies, then the function of exchange rate would come in, obviously.
Correct.
So that would jeopardize the very basic premise on which we are working at the moment.
Yeah, I mean the exchange rate will kind of mimic how the exchange rate works today. So, I would expect that every central bank in every country will keep a close eye on the monetary policy to see the supply of stable coins in that market vis-a-vis the local currency. So I do feel that like this is something which cannot be ignored. And, I think we have to really go back to the point around what currency are the assets held in. So, and that's going to really define the future of which currency is going to be more dominant in times to come.
Yeah. Yes, anyone else who has a question?
So I have a question on the
And this
tariff
would be
part.
the last question. This will be the last question.
Yep. So as far as tariffs are concerned, so my question to all either of the panel is that what tariff mitigation strategies are MNCs adopting, across industries, be it pricing, supply chain changes, or cost management? So what are the kind of strategies that you are looking at globally?
Yes, who would like to answer this?
So, Jan, would you like to answer that?
Sure. As of now, if you see, with the exception of this 25% penal duty, the tariff rates are not very, very different. It ranges from, say, 10% to 25%. Having said that, for similar kind of products, say, if you compare Vietnam, India, and Bangladesh in the context of textile, it will be between 15 to 25%. As of now, as you know, the situation is fluid. I don't think companies have taken a strategic decision how they relocate things. But one thing I think what we are missing out, the earlier studies have shown that 80% of the burden of tariff actually was borne by US between 2017 to 21. 80% of the burden of tariff was borne by US retailers importers and consumers. 20% was on the exporting country. So naturally, I think if you look at the differential between the tariff between India and other countries is 10 percentage point, and 2 percentage point only comes to Indian exporters. They can easily absorb that. And in that sense, I don't think there will be a huge relocation. Second, I don't think Trump's tariff are WTO compliant, because the basic principle of WTO is most favored nation. You cannot have differential tariff on the same line for different countries. So I think this is going to be seriously challenged. And within US, there is also question whether the president has the authority to declare this kind of tariff. So I don't think you have heard the last thing about this. Lot of litigation is going to happen on these issues. So therefore, I think companies will be sitting on the fence for a time being, until unless there is a 50% tariff where it makes changes the needle. Otherwise, I don't think there will be a too much of relocation. But that's my view. Varun, you
No,
might.
I completely agree, Sujan. I'll just add 2 more points to that. So I think, so there's obviously a relocation point and everyone understands that very well. From a product strategy standpoint, I'll just throw one example here. If you look at public announcements from Coke and Pepsi, the 2 biggest input to what they do is aluminum, the cans, and sourcing of sugar. And they've spoken very publicly about moving to use of plastics instead of cans. So a lot of companies are reworking their product strategy, just keeping tariffs in context. So that's just one example over there.
So that may
The other point,
affect the long-term strategies as well.
like, absolutely. And the only other piece I would say is consumer retail industry, apparels, etc. MNCs operate on 5 to 6% of operating margin. And the auto industry also operates on a very small operating margin. And there is no company in the world which can absorb a tariff of 25% on metals and high tariff on other products. So from a corporate strategy standpoint, it'll be either the consumer who will bear the burden, or it's going to be the manufacturer or people who are in the supply chain. They'll need to absorb the cost. And I can tell you for sure, a lot of MNCs would be going back to their tier 1, tier 2 suppliers to renegotiate the prices. They would also be looking for the country level MSME, I would say schemes, which they can work with the governments to help their tier 1 and tier 2 suppliers. So in India, I hear about production linked incentive schemes, etc. So, I definitely see a lot of chatter in the market where, companies have started to comb through these schemes and understand how they can help their tier 1, tier 2 suppliers beyond all the geopolitics of the current situation.
Thank you, Varun, and I in fact thank all the panelists first of all that on Janmashtami this Saturday evening they could take out time, and Varun, you could take out time on Saturday morning there in New York for this panel discussion. I know that the time was not sufficient for these 2 very vast subjects for discussion, but the purpose of the seminars or virtual discussion is not that everyone would know everything in this session, but the thought is initiated. Everyone knows a little more information. They can take better call. They can better advise their clients. They can then themselves study. They can form their own perspective and then deal with it further. So Rathi sir, Satya, Sujan, Varun, and Gaurav, thank you so much.
Thanks to you, Sanjay, for organizing this. Wonderful. You have taken this initiative. So everybody needs to be thankful to you.
Yeah,
Thanks a lot,
I
Sanjay,
thank the
and
audience
thanks everyone,
also.
all the panelists.
Thank you, the audience, for staying with us for this discussion
Thank you,
on
sir.
this
Thank you.
Monday. Thank you very much. I'm now signing off. Thank you, Ashok. Thank you, everyone.
Thank you.